This is Annuity Straight Talk. Since 2008, your host, Brian Anderson, has helped clients nationwide navigate the complex market for annuities. With Brian's assistance, hundreds of clients have achieved a profitable and secure retirement. I would know, because Brian has answered many of my questions concerning annuities and retirement planning. So that you can benefit as well, let's get started. Here's Brian.
Hello and welcome everyone to the Annuity Straight Talk podcast. My name is Brian Anderson, founder and creator of Annuity Straight Talk. Welcome to 2022. This is our first episode. I apologize. I took a few weeks off getting the website finished. Couple of technical reasons. I couldn't really post anything to it as it was being lifted over from old to new. So I was lazy and I decided not to record anything and just took some time with family. I BS'd with my good buddy John quite a bit, and we've got him again for a fourth time. Is this the fourth time, John?
Yes, it is. Brian, Happy New Year.
Happy New Year. I'm excited about it. I got to get the creative juices flowing and get back in the game, and I'm planning on popping this stuff out once a week all year long. Should that be a New Year's resolution? Get 52 of these out this year?
You can do it. I think that's great. You know, why not?
Well, so John, I'm going to tell you, and we kind of we start recording, we pretend that we just started talking. Oh, hey, John.
That's right. That's right.
We've been bullshitting for about an hour.
Right.
I took my dog for a long walk and got him all worn out, and then John shows up late. It's Sunday, so it's like there's really no schedule. But
it is Sunday fun day. We're ready to do this podcast, get some great information out to your listeners, and then we go from there.
Yes, and by special request, I put the rifle back in the window. It's just a toy. It's not a real one. Wink. And John, you came up the other day. We were talking about. Now, actually, I mean, something to tell is we've had some good success referring people to you who are looking for annuity alternatives and whatnot. Haven't we?
That's right. We have. We've had some great success over the last 6 or so months, and I think a lot of it has to do with the content that you provide to your listeners. So my hat's off to you.
Okay, well, thank you, and I appreciate your contribution to that. It's been great. I've had a lot of really good feedback from people, and again, if you like the podcast, to subscribe to the podcast platform or on YouTube, get notified when an episode comes out. Would love to have some comments so we know how to improve and what else we can add. You can always give Annuity Straight Talk a call at 800-438-5121 or schedule a call using the appointment button on the new website, which I'm pretty excited about. Don't know if you've taken a look at it, right, John?
Yeah, Brian, it's a nice refresh for the new year. It's definitely did a great job. So, congrats to you on that. It looks great.
Well, thank you. I appreciate it. And one thing, so when we were talking last week, we've got a couple of cases that we decided to work together on. And actually one of them, and we can talk about that later, I think would be a great case study for people. We'll talk about performance and fees and stuff like that would be a good topic. But you had an idea because we were talking, I think it was toward the end of last week. I think it was Thursday or Friday. And you were kind of watching the market. John's the investment professional. I'm the annuity guy, and it's a pretty good team I think we've got. But just kind of tell me where your head's at there. And why don't you introduce the topic to everybody?
Yeah, as we've kind of rolled into the new year, we had a great end of the year in the markets. And obviously, this is for informational purposes and educational purposes only. Don't take any specific recommendations unless you consult your advisor, Brian or myself. But yeah, we had a great 2021. Finished the year fairly strong despite some of the fears that we had from the Omicron virus. We did start to get a spike in interest rates, and the 10-year note was something that we really wanted to pay particular attention to.
Where did the 10-year rate finish up? Wasn't it in the 146 or 7?
146, 147, and as of Friday, we're close to 1.7. So we had, the first week of the year, got out of the gates, just got hammered in a lot of the technology area. The NASDAQ QQQ or the NASDAQ 100 just really took a beating. We had a really quick and fast spike in rates. Hopefully that levels off, but that begs another question here is, are we going to have a year like we did last year or in 2021? That's up to the market gods to decide, but I think we're in a really precarious position in a few of the indices, and I'd love to share some charts with your audience and let them make their own decisions on that.
Yeah, that'd be great. Well, why don't you share your screen and we can continue talking while you do that and get ready for it. But you mentioned this is not investment advice, not by either one of us, and it's not for me as an annuity guy. Obviously, I like them. I think everybody should have some money protected. I think annuities are a great way to do that, especially where rates are at right now, threatening to go higher. They're low right now. You want to leverage them, but the biggest thing is we're not trying to scare people, because if short-term events cause you to change your plan, then you didn't really have a great plan to begin with. So we want everybody to be ready for this, and the point of doing prudent planning, especially in retirement, is that the short-term events don't affect you in the long run, and certainly don't keep you up at night. So the point is just to educate you and talk to you about what could be on the horizon, the types of things to look for, right?
Yeah, absolutely.
If you're not prepared for it, then that's, we're not trying to get you to do something that you probably should have done before if it worries you.
Yeah, I'd agree. I think, I always ask clients, are you invested for next week? Or are you invested for the next, 5 or 10 years? And that's an important question, but you always want to be aware of what's going on. If you can sidestep some nasty dips with the proper planning, I encourage people to do that. If they have the ability and the knowledge to do that. It's never fun trying to come out of a 20% downdraft in the market. Quite frankly, February and March of 2020 was very different. We had the Fed pump $2-3 trillion into the economy. There was so much liquidity sloshing around. The markets just had a V recovery. I just don't think that's going to be possible with inflation right now running so hot.
No, that's true. And they did just fail to pass a big spending bill, right, at the end of the year. There's a big Democratic spending bill, the Build Back Better. King Biden was putting that out there. So there's not going to be, it sounds like that thing's dead. It doesn't look like there's going to be any excess federal spending, at least in the near term. Would you agree with that?
Yeah, I would agree.
So it's quite a bit different situation than, like you said.
I think so, yeah. A lot of the things that the Fed will do, the S&P 500, it looks like the Fed has really reacted to the markets once the S&P 500 really kind of comes down to the 200-day moving average. And that seems to be like a theme with Chairman Powell. But, we'll see. I'll share a couple of charts with you. We'll start with the Dow Jones Industrial Average. And let me see if I can share this with you. Okay, so you can see, if I zoom in here, you can see that this is the weekly chart on the Dow Jones Industrial Average. We had, the Omicron scare here, and then in December we finished actually really strong. This is the weekly chart, and you can see this average here is the 50-day moving average. So we bounced off the 50-day moving average right after Thanksgiving, and then just finished the year really strong. But what I'm looking at right now is this weekly candle, and I don't know if you can see that really well. Can you see that?
Which one? I don't know what you're pointing at.
It's this candle right here. I'm actually gonna take a picture of it. I'm gonna zoom in on it. Let's see if we can get it here. So this candle right here, that's what we call a spinning top. That's a pretty bearish weekly candle, particularly on a drop in volume for the week. You normally see like New Year start off. You have a lot of money being put to work. It was a pretty precarious position that we're in the markets. But what I want to show you is the Nasdaq 100. And I kind of drew this here. We finished the year pretty strong, but we can already see we had a really bad week to start the year. And we're already back down to mid-November level, broke the 20-day moving average. I would assume that if we bounce off this, we could have what's called, you have a lot of resistance right here. Up at this level here, if you can see that blue line.
Yep.
There's a lot of resistance here. So I would assume that this week, if the 10-year note levels off and interest rates don't continue to spike, that we have something that is going to look like, if I can draw something here, it's going to look like something like this. And you're probably going to hit resistance here. And then I think we kind of taper off down here. You're going to have some support here at the 50-day. But we're in a really precarious position in terms of the markets. The one thing that we really saw last year was a lot of technology that had really run up during the pandemic sold off. You had a lot of the stay-at-home names just really get crushed off, anywhere between 40 and 80%. The DocuSigns of the world, the Zooms, the Zillows, the Twilios of the world, Shopify. A lot of those stocks have really sold off, but you haven't seen that real huge sell-off in the major indexes, and that's because of the Facebooks, the Amazons, the Apples, the Netflix. They've all seemed to be a safe haven for investors, or a lot of the proceeds from sales of other stocks have gone into those. So it continues to prop up the major indexes. If we do see a rollover in the Apples or the Amazons or the Netflixes or the Googles of the world, we're in for a pretty sharp drawdown, in my opinion. Not to say that that's going to happen. No one has a crystal ball, but I think that could be the setup unless we have something. We're going to have to raise interest rates. The Fed has already signaled they're going to raise interest rates about 3 times in the next year, and it could be 4. So what does that mean? That they want to take down the notch of inflation, where inflation is running really, really hot right now. And it's really hurting the middle class and the lower class. It's a huge tax on people. Think about the people who, have a job, they have a couple kids at home, and they've got to go fill that tank up with gas. I don't know what you pay up there, but here in California, I'm paying north of $5.50 a gallon.
Holy cow! Yeah, that's pretty bad.
It's a big concern. And so you have that, and then you also have the small cap index, which has really run. And I use the IWM, which is the Russell 2000. The IWM, which is the Russell 2000. And you can see here on the chart, we've kind of been in this range for quite some time. And for the last 11 months, we did try to break out, early November out of this, came right back down, and we're continue to be in this channel here. I think a close below 210. There's not a whole lot of support down here in this area. The next moving average here is the 100-day. That's at 188. That's a pretty steep drop from 210 all the way down here. So, it could be a pretty precarious market if you start getting some sell orders. There's a couple other things that we pay attention to as well, but go ahead.
I mean, you talked about some of these trends. I think it was the first one you did with us. We talked about when will the market crash. It was probably last September. You actually called it pretty well, because as soon as it came out, then we had like a little short-term correction in the prices. But pretty interesting stuff, I think. And you see definitely with that big run up, end of 2020, it was end of 2020 is where that big steep run up comes, and then essentially it's just kind of been bouncing around and resisting against the top, like you said.
Yeah, it has been. We've been in this trading trend, and interest rates spiking. We know that the Fed has to do something to curb inflation. There's just a lot of different factors going on. Not only, I don't even want to get into the geopolitical things. What's going on around the world with China and Taiwan and Russia and Ukraine. But those are some things that could have some serious implications on global markets. So it's just something to consider. There is one other thing that we kind of really take a look at. And if you don't mind me sharing, I'll see if I can pull it up again. Let me show you this. So one thing I really pay attention to is margin debt. And if you can see this chart here, can you see that margin debt?
I can see it. Yeah.
Okay. So
There.
I've highlighted this is the margin debt balance in the S&P 500. This is from advisor perspective. This is an advisor website that I use quite often. But this kind of measures the margin debt over time, going all the way back to 1997. And you can see the blue line is actually the S&P 500, and the red line is the margin debt balance. And margin debt means, if I buy a stock at $100, my broker, whoever it might be, Charles Schwab, Fidelity, TD, many of the other big brokers on the street might let me borrow another $50 or another $100 so I can buy more of that. So I'm actually borrowing to buy stock. The problem that we encounter is that when a stock starts to fall, and it's all good when the stock is going up, but when the stock starts to fall, you get what's called a margin call. And what happens is that most people don't want to send money to their broker to support a losing position. So the broker will technically sell out that position automatically. And that triggers a cascade of selling. And you have a lot of people who trail their stocks or their indices or their investments with a trailing stop loss. And if you get a whoosh in the market fast enough, you're going to start hitting those sell orders or those stop losses, which trigger, it's like selling begets more selling.
So it's an acceleration of it.
Yeah, it starts to really accelerate to the downside. You can see exactly the same thing. Here's 2000. Margin balances were super high, kind of peaked with the S&P 500. Then we had the dot-com crash. We kind of came back up. The S&P 500 was, really attempting to recover back to, I'd say July of 2007. Margin balances were at also an all-time high again. We had the great financial crisis, huge recession. It took us about, 3.5 years, 4 years to get back to break even on the S&P 500 here. You can kind of see January of 2018, we had a pretty significant correction. We had very high record margin balances, had a nice correction in the market. And then you had, the scare from 2020 when we had the COVID-19 virus come out. And you can see right now we're at all-time record high margin balances, as we are all-time record high with the S&P 500. So to me, that's an indicator that, could we be set up for a pullback? I don't know. It's something to be cautious about. It's something to keep in mind. Yeah. It's a level of interest that we want to be very aware of when we look at our portfolios.
Right. So yeah, you can see in 2007, it was a debt crisis, and that's where the margin debt crossed over and went above, came crashing back, and it doesn't seem like those two stay right next to each other for very long.
No, it doesn't. But you can see, I mean, there's sort of a trend there, and you want to make sure that you're aware of what the trend is. You know, every time you get a peak in those margin balances, you get a pretty significant pullback. I'm not saying that that's going to happen this time, but it's definitely something to keep in the back of your mind as you know the market plays out. And I would say, you know, in the next couple weeks, this could be, you know, there could be some potential for some increased volatility. We did see that at the beginning of this week, and we'll probably continue to see it throughout the course of the year.
Well, and that's always been mine. I think there's a lot of people that'll just kind of they'll just say, "Ah, the market's gonna crash," right? And it doesn't just crash and stop. I mean, it goes somewhere. It goes up. It goes down. And I always thought that's what the way this was going to work, just because you look at the big money like the hedge funds and institutional stuff. There's guys buying deals. It's gonna. I always felt we're gonna see um, you know, we're going to see a little bit of pain, but it's just going to kind of be up and down. It's going to be a little bit all over the place. Um, that was always my gut instinct, really.
Yeah, what I follow a lot of the fund flows, and what I see is you know particular environments like this, and we saw a lot of it in March and April of 2020 is when the algorithmic hedge funds or the high frequency hedge funds get involved. They just push the market around at will. Fundamentals don't matter at that point. It does seem that we do have some fundamental cases for investments in energy, investments in more value oriented. I think we are rotating from technology, those uh, high valuation sectors like real estate, technology. We are seeing um, a rotation more so than we did last year into some of these high valuation names, value stocks. There's and you can pick individual stocks. I like to pick sectors that might be able to kind of shield me from significant drops in the market. But it's all about having a diversified portfolio, not having all of your eggs in one basket, but really trying to protect yourself on the downside. You're winning by not losing. So if you don't have to crawl out of a huge deep hole, you're able to kind of get back in the saddle, as you would say, and continue the ride once you get bucked off the horse.
Or have some cash available to buy in low, right?
Absolutely,
We
absolutely.
talk about how to beat the market with an annuity. I'm going to run that one here in a next week or two. So, not to change the subject, steal your thunder by any means, but I think these are all good things that people should pay attention to. And again, the point is that you would have had a plan in place where that kind of mitigates the effects of this so it doesn't damage your portfolio too much. But if you haven't, that's why you reach out to us. Happy to talk to you about protecting money myself. AnnuityStraightTalk.com. Schedule a call or call 800-438-5121. If anybody wants to get a hold of John, you get a hold of me and I'll put you in touch with him. But I'm the gatekeeper though. He's a hard man to get into. He doesn't return phone calls till Sunday.
Uh, it happens sometimes.
The big hitter in LA. Anyway, no, I think it's I think that's great information, and I think it's a good indicator for people to look at, especially kind of starting the new year. Um, any specific ideas that you have for people for how to handle this aside from just knowing what could happen, right?
Yeah, I would say if you work with an advisor, reach out to that advisor. If you're not getting sound advice from that advisor, go ahead and reach out to Brian. Brian can get you in touch with me, or we can work as a team. We definitely would love to review your portfolio, see if there are any gaps in it, see where there are levels of concern or areas of concern that we could help you with, and we definitely give you a second opinion on stuff like that.
Hey, that sounds no, it sounds good, and that's what we're here to do. We're here to help people. I field phone calls all the time. It's not about just making money; it's just making sure everybody doesn't get caught in the wrong position, makes good decisions for retirement. The point is to help people. Well, uh, We got dogs that'll hunt at times, but not all of them do. So, like I said, we'll make money. That's not the concern here. The idea is to help people figure it out. So, I don't know. I think I'm looking forward to 2022, and I don't necessarily want to see tension in the markets. I don't want to see people lose money. I don't want to see people be stressed out. I want people to be prepared for it. And this is about playing offense. I always say offense in retirement, not defense. That's where some of our ideas come from. And that's why it's good to have John, because he keeps an eye on all these other little things while I'm busy on the annuity side with people. So I don't know, be prepared, right?
Yeah, absolutely. Always be prepared. You never know what the next trading week or the next month will bring you, particularly in the world that we live in today.
Yeah. Well, okay. I think that's well said. I think that's about perfect. But anything else you want to add before we call her for the day?
No, that's it. Brian, appreciate you having me on again. It's always a pleasure. Really have gotten a lot out of your content, and I've shared a lot of it with my clients. So keep doing what you're doing.
The best is yet to come from both of us, and we'll have John back here in a couple of weeks. Again, if you want to get a hold of him, you can send me an email. You can schedule a call. You can call me at 800-438-5121. Subscribe to the podcast if you'd like to be notified when they come out, and we'll have you back. We're going to talk about maybe we'll just give it a few weeks. We'll have you back to say, "I told you so." How about that?
Well, we'll see how it plays out. But we definitely want to keep our eye on the market. If you have any questions between now and then, feel free to give Brian a call. He'll get you in touch with me. We'll go from there.
So this one, and this is, we're recording on Sunday, the 9th of January. This is going to come out on the 13th.
Okay. Yeah.
We'll get out there to everybody in a few days. And like I said, we'll be back next week with another episode. Don't know if John's going to do that one, but we'll have him back soon. So thank you for joining me, John, and appreciate what you add into the business this year, that you've done. And I'm looking forward to a good partnership this year as well.
Yeah, me too, Brian. I appreciate it. Thanks so much. Have a great Sunday.
Okay. Hey, you as well. Everybody, thank you again for joining us. Have a great day, and we'll see you next week. Bye.
You have been listening to Annuity Straight Talk. The preceding information is for informational and educational purposes only and does not represent tax, legal, or investment advice. The views expressed by guests on this program are their own and do not necessarily reflect the views of Annuity Straight Talk or its partners. No information presented today should be acted upon without meeting with a qualified and licensed professional. It is important that you read all insurance contract disclosures carefully before making a purchase decision. Guarantees are based on the financial strength and claims paying ability of the insurance company.